Hey everybody, thanks for coming back for another episode. It's March 12th. I took a bunch of trades today. Took trades on Stitch Fix, Tesla, UWT, which is a weighted oil fund, Boeing, and Facebook. So I did do some over trading today, but and today is also a down day. I'm down $220, which is never a good thing. Um, I would have stopped earlier in the morning at around 120 or $130 loss on the day, but I thought about it and I am on a demo account, so I figured, and like I've said before, I'm trying to start trading during the afternoon now. Even though the stock market typically doesn't make as big of moves in the afternoon, I'm still trying to get as much market time in as I can right now at this point. So I decided to continue trading even after my $150 max loss limit, and that put me down $220 on the day. So unfortunately, not. I wanted to have a green day. I've had a few good days here recently, and I think I've been today. I was over aggressive at the market open. I broke my first rule, or the first thing. I don't know if it's really a rule, but it's something new, is not trading in the first 15 minutes, and I really should make it a really hard a mandatory rule for myself. So I trade in the first 15 minutes, and that didn't I actually made money on that trade, but nonetheless it kind of threw me off. I need to be taking that time to really assess the overall market and be and pick out the best the best setup I can find in that first 15 minutes as well. And when you take a trade in the first, what I did is I took a trade. I made a little bit of money. We'll just get right into it. I'll show you on six. I took a trade, made a little bit of money, and then I got back in another trade, and it's taken my attention off other things that I could have been watching. That's the importance of being so selective. Because once you get into a position, guys, and no matter what it is, trading or investing or whatever the case is, once your money's tied up and your money's tied up depending on your strategy, your time's tied up and your thought process is tied up in that particular stock which you're in. Anyhow, enough talking about that. So you want to be selective. So I wasn't selective enough. Anyhow, let me get over to the SPY real quick for us. So we traded up here sideways today, holding above this golden line, the previous day closing price from back here yesterday when we had a nice run up to 279, the high 278 level. So today we traded up around here, bouncing around 279 and 278. So that's a good sign for the bulls. Let me pull up the 180-day chart over here. So this is the 180-day chart. We can see we sold off pretty heavy last week down here at 272, and then the past couple days we've had this big reversal, and today we've just mostly traded sideways. You can see these two 4-hour trading candles on the day. We've just stayed here between this range of 279 and 278 and 280. So anyhow, enough of the SPY. That's all I'm doing for that. All right, so the first trade I took was on Stitch Fix. I don't even know what this company is or does. They have earnings. I like their so that's mistake number one. But I liked their longer term time frame. We can see this the 180-day 4-hour chart. They're gapping up here, and I took them long over this resistance level of $35, which you can see correlates back here about 6 months ago, 5 months ago, to these highs, these previous highs back here. So I thought that we had a room once we broke through this level here of 35. I thought we had room to run up to 40 and up. So I took it long. That was a mistake. I got overexcited, and that wasn't good. But anyhow, we can see they're pushing up here, strong pre-market, holding above these $33 level. And my plan was to go long at this white line at 33, which we can see. And I've started to notice this. Had a bunch. This is a reversal. You guys probably noticed this. I've had a bunch of trades where I take off stocks that are gapping up pre-market and sell significantly back down, and I take them for a reversal trade, and I've had decent success with those. This is what I should have done because it would have came close to my entry price. I could have pulled it off up and could have taken a trade right here, but instead I took it long up here above the VWAP, and I went. I took 150 share. I took 50 shares long at right in here at where did I take this? 36.38. So sorry guys, let me edit something for you. So where that yellow line is, where it's pointing at that red candle, when this price was dropping down, I took a long position here, a starter position, 50 shares at 36.38, and I was risking to the VWAP, which was at 36, so I was risking about 15 or 16 bucks on this trade on 50 shares, and we got this pull down closer to VWAP, and I added another 100 shares here at 36.30, so I was risking about 45 bucks or so at that, 45 to 50 bucks, and then we got this push up here immediately, and this candle straight up, and typically when a stock has a big move up, pulls back like this, and has a big reversal, I should have taken my profits up here. I was up over 150 bucks, but I wasn't looking at my P&L. But this is about a dollar move here, and typically they don't just keep running after on one big candle. Normally they'll pull back like it did here and then go. So in hindsight, I should have just I got this big overextended candle. I should have taken off some profits here or taken off everything and then looked for another entry down here. I would have been up. So and then so I sold out on this backside candle for a $20 gain, and then I re-entered over here at VWAP and got stopped out for a $50 loss. So that wasn't good. And then I went over to Tesla, so I was down about 30 bucks at that point. So that's what I'm saying. I should have, after I got that $20 loss and I could have made over 100 bucks on this, but instead I waited and stopped out on the backside for a $20 win. I'm sorry, a $20 win. I should have been looking at other stocks then, but I immediately re-entered here and I could tell the stock wasn't that strong. I mean, if we look at the volume, there's not really significant where I was buying. There's no real significant green candles besides this one. There's a lot of red seller candles in here, so there's a lot of selling pressure here. The stock was really overextended if we look on the 180-day time frame. There's a lot of people that were trapped in here. The stock had a very high short percentage rate, so I was hoping that shorts would get squeezed out, and I thought there'd be a lot of shorts trapped. But apparently, they reshorted more, or the sellers that were trapped, the buyers that were trapped here, sold once we got this push up here. Um, and it kept the price down today. So normally, if there's a lot of shorts in there and we get buyers, they'll get squeezed out and the price will just go nuts to the upside. That didn't happen today. I can't spend any. I'm obviously not going to get through all my trades today, but I'm going to keep going as fast as I can. I rambled on way too long about that one. So $30 on that loss total on two trades on Stitch Fix. Then we got Tesla. Tesla, I've said before, we're looking for a bounce here. We can see on the 180-day chart, we can see we've sold off into this buy area that correlates more or less with previous areas, with past trading areas of support and demand for the stock. historically. Now, we can see at the looks of this after a day, it looks like it's going to roll over. But anyhow, after this big push up yesterday, I thought that we were going to get a continuation. The stock was dropping down pre-market, and that was presenting me with a good opportunity. So I thought it was just going to run here. This is the previous day closing price, this gold line. I thought it would just run up today, but we got this pullback, and there's a bunch of bad news on the stock right now. Decently, the SEC is looking into the stuff that Musk tweeted about taking the public private a few months back in the middle of 2018. Then also, they're lowering the prices of their Model 3, and investors don't like that, or whatever. They're cutting costs. Anyhow, so I guess, that may be why we didn't get any follow through on the bounce today. So, but that being said, I was going off technicals here, and when the stock dumped out like this and the opened up so much lower than previous day close, I knew that there was a chance that this was a good entry to get a reversal up towards the previous day close. We put in this low here, we got a push up, and then put in this higher low compared to back here at 283. We put in a higher low at 284. And then we started to push up, and I went long here at 285.50. I was actually watching this at 284.30, thinking. Sorry, I was watching this at 285 or 284.30, actually, thinking I'd go long 100 shares and set my stop at 284. I should have done that. I would have been up over $300 if I sold out up here at the top. Anyhow, I waited to this push for confirmation. I only went long 50 shares because I had to set my stop loss at the same place relevant, because you don't want to change your technical stop loss level, so you have to change your share size to reduce your risk in that way. So I only went in 50 shares. We got this push up, and I would have sold out here normally because it's so overextended. This is almost a $3 move. I was up over $100 on only 50 shares at this point, but I haven't been looking at my profit and loss while I'm in trade, so I didn't know how much I was really up. I was busy looking at all the other time frames, normally I'm looking. This is my trading chart, guys. So this is the 1 day, 1 minute. This is the 5 day, 5 minute, and this is the 15 minute over here. Anyhow, so I'm looking at multiple time frames. So I was looking at multiple time frames, and I was thinking, sorry, guys, I just messed up there. Here's Tesla again. So I was looking at multiple time frames, looking for resistance, and we had a lot of overhead resistance here. This 200 EMA, and on the 5 minute, the 200 EMA, and on 15 minute, we had this 200 EMA, and a lot of traders will use that as points to take profit. And although besides that, and I don't like to rely on those too much, but besides that, we didn't have much resistance besides this pre-market resistance. And I took profits off early on yesterday in a pre-market resistance zone. That was a mistake. So I was trying to hold, thinking that we were going to get this reversal, and I wanted to get up to at least the previous day closing price, but we can see that didn't happen. It dumped out, and I sold out on this backside drop here for only a $26 win on that. So, I took other trades, guys. We're not going to be able to. I took a trade on UWT. I was watching this, and we got this breakout up here over 16. And I went long at $16, 800 shares, and we got up to 617, and the $16 a pretty significant level. I saw a ton of buying volume come in here on all these green bars in here, and once we got this big red volume bar, I sold out everything for a $56 loss. I didn't get out in time. I sold out under $16, so. I was watching this stock because I actually have a position in here which I sold out of today because it's been chopping around so much in my live account. On my swing trading account, it's very, very small, $500 position, but I'm out now, and I'm sold out of that. So